วัสดีครับยินดีต้อนรับเข้าสู่รายการพิเศษ FINNOMENA X Franklin Templeton การจับมือครั้งสำคัญที่จะรวบรวมข้อมูลการลงทุนระดับโลกมาแชร์ให้กับนักลงทุนชาวไทยทุกคนได้ฟังกันครับในวันนี้เนี่ยผมศกฤษฏ สิริสมภพนะครับเป็น Content Developer จาก FINNOMENA จะมาเป็นผู้ดำเนินรายการในวันนี้นะครับในช่วงที่ผ่านมาเนี่ยหุ้นเทคโนโลยีเนี่ยถือว่าเป็นทีมการลงทุนนะครับที่หลายๆคนเนี่ยให้ความสนใจเป็นอย่างมากเลยนะครับก็โดยโอกาสการเติบโตนะครับในระดับสูงเนอะที่อาจเกิดขึ้นได้ในอนาคตนะครับในวันนี้เนี่ยผมก็ได้เชิญคุณจอร์จ รัสเซลนะครับ CFA นะครับเป็น Institutional Portfolio Manager จาก Franklin Equity Group นะครับก็จะมาให้ความรู้แล้วก็มุมมองเกี่ยวกับหุ้นเทคโนโลยีในวันนี้นะครับถ้าพร้อมแล้วเนี่ยก็ติดตามรับชมรับฟังไปพร้อมๆกันได้เลยครับ
Hello, I'm George Russell, the Institutional Portfolio Manager for Franklin Equity Group's U.S. Growth Team, and I wanted to thank Kuhn Out for giving me the opportunity to discuss a topic our group believes is both timely and exciting: investing in innovative companies. We truly believe that this is the most exciting time in history to be investing in innovation, as we have seen innovation explode across almost all areas of the economy, creating incredible opportunities for investment. We have been investing in innovation for over 50 years from our corporate headquarters in Silicon Valley and have seen innovation accelerate over the past 5 decades. I plan to discuss our investment process, thoughts on valuation for technology and innovative companies, and where we're finding opportunities for investment today, as well as some exciting potential innovation in the future. But first, I should define innovation as we see it from an investment perspective. When we think of innovation, we think of new. We invest in companies that are pioneering new technologies, creating new products, have new ideas, use new methodologies, or in some cases are creating entirely new industries. Although there has been an increased focus on investing in innovation, we continue to think that many of these companies are mispriced, as innovation frequently lasts longer and is adopted faster than expected. As mentioned, we have been investing in innovation for over 50 years. When we started to invest in innovation, we were investing in things such as commercial airline travel, makeup, photocopies. In the 80s, we were investing more in PCs and the pharmaceutical industry. In the 90s, it was more PCs and semiconductors and pharma and biotech. In the 2000s, it was the internet. Late 2000s, smartphone, and then of course we have all of this innovation that is taking place today. The point is that we've been investing in innovation now for over 50 years, and what's been defined and thought of as innovation in each one of those decades has continued to evolve, but we've always had this focus on investing in innovation. As we think about today, we really believe that we are in the midst of this fourth industrial revolution where innovation is exploding across all areas of the economy. Much like the second industrial revolution, which saw advancements in telecommunications, transportation, and industrial production, which led to strong economic growth and massive platforms of wealth created, we believe we are seeing innovation accelerate across all areas of the economy. Whereas people now remember the names of Carnegie, Rockefeller, and Ford, 100 years from now, people will remember the names Bezos, Gates, and Zuckerberg. We continue to think that innovation will accelerate and the opportunities continue to increase for us as we look to invest in this area. Now, there are 3 parts to our investment process for investing in innovation. We believe that innovation drives long-term wealth creation in the economy. We want to focus on those companies that are really innovative, those companies that are creating new products, new industries, new processes, because those are the companies that are creating economic wealth, economic growth, and economic value. And in our opinion, that is one way to outperform the market, to focus on those companies that are creating economic growth and creating wealth. The second part of our investment process is that investing in innovation demands active management. We really believe that these companies are, in many cases, the most misunderstood companies out there. Now, Many of the companies that we own in the portfolio are household names. We've held them for a very, very long period of time, but we continue to think that they are misunderstood by the market. Now, I'm going to talk about valuation in a couple of different ways. Right now, I want to talk about our thoughts about valuations for these innovative companies and how they tend to be mispriced. We believe these companies tend to be mispriced in one of two ways. Either the duration of growth lasts much longer than the market expects, or the pace of growth, the acceleration through the S curve of growth is much faster than the market expects. And our valuation tools are designed to exploit these inefficiencies in the market. If you look at a company like Amazon, for example, this is a company that's been growing at very, very high rates of growth for now over 2 decades. And a lot of investors just look at today's stock price and they compare it to the expected earnings for next year or the year after. They look at the PE and they say this company is very, very expensive. But companies that can grow at very, very high rates of growth for a long period of time, 7 years, 10 years, 15 years, in some case 20 years, that growth is mispriced by the market in our opinion. The second way that these companies tend to be mispriced is that the pace of growth is often underappreciated by the market. In many of these types of industries, when you have a new product, a new idea, the uptake of that technology can be very, very fast. You can see significant acceleration in sales growth and in earnings growth that's often missed by the market. So we want to build those faster growth rates into our valuation tools. So when we think about valuation, we really think about valuation at the individual stock level. And in our opinion, a lot of these innovative companies continue to be mispriced across one of these two metrics. Either the duration of growth lasts much longer than expected, or the pace of growth, that acceleration of growth, lasts longer than expected. The third part of our investment philosophy is that innovation occurs in all parts of the economy. And I'm going to touch on this in just a moment in terms of our 5 platforms of growth. But first, I do want to dive a little bit deeper into this thought on valuation and valuation for technology companies overall. I discussed how we value innovative companies, looking really at the duration and pace of growth and thinking about their growth rates just in terms of very, very long-term growth cycles. But I also wanted to spend a minute discussing our thoughts on valuation for the technology sector overall. We believe that the valuations of technology companies are still reasonable relative to history. Over the past 30 years, the sector has traded at an average premium to the S&P of around 15%. The current premium is a little higher than that at 25%. So it is a little higher, but it's not alarming in our opinion. What is important to note is that the sector has strong secular growth characteristics as technology is being increasingly adopted across almost every industry. Quality in the industry remains high, with good profit margins, increasing levels of recurring revenue, and strong balance sheets. Overall, we believe that the valuations of technology companies are reasonable relative to the market, given the outlook for strong growth and very good quality. Now, I mentioned that the third part of our investment thesis is that innovation occurs in all parts of the economy. And a number of years ago, we were really thinking about how could we classify and characterize all of the innovation and disruption that we're seeing across the economy, be it in the retail space or in healthcare or in the industrial and energy space or in financial services or in technology. And at that time, we developed what we call our 5 platforms of growth. These 5 platforms of growth are disruptive commerce, genomic advancements, intelligent machines, new finance, and exponential data. And this is just one way for us to kind of think about and classify a lot of the innovation and disruption that we see taking place across the economy. Now, these particular platforms of growth are not static. We expect that over time, new innovations will emerge, that these particular platforms will evolve over time. But right now, these are some of the areas where we have investments today, as well as some of the areas that we think will be very, very exciting in the future. So what I'd like to do now is go through each one of these platforms of growth and just discuss our general thesis about these platforms and where we're finding opportunities today. So first, on disruptive commerce, this is much, much larger than people think. When we think of disruptive commerce, the starting point for many people is e-commerce. So this is going to be companies like Amazon and Alibaba and companies like that. But we really think of the disruptive commerce space as being more than just e-commerce. It does affect media and transportation and logistics, and the payment sector, it's much, much larger. When you look at this particular slide, what you see are various industries and their level of penetration. And really the point of the slide is that we still continue to think that there is significant opportunities within the disruptive commerce space. Now, some parts of the economy are very, very highly penetrated. If you look at areas such as media, toys, office supplies, etc., significant portion of those sales are really all taking place online at this time. But there are still massive, massive profit pools yet to be exploited where there's very, very little presence online. If you look at real estate, for example, there's a lot of real estate information online, not a lot of transactions that are taking place online. Could be more in the future. When you look at auto sales are still a very small percentage of online auto sales are taking place. Now, that is a strong area of growth and very, very exciting, but right now, still relatively few auto sales compared to the whole market taking place online. And then when you look at healthcare, healthcare is one of the largest parts of the economy within the United States and is very, very ripe for disruption from increasingly moving to having an online presence. So even though we're really finding a lot of opportunities within this disruptive commerce space, we think there are more opportunities to come and additional massive profit pools yet to be exploited. The second platform of growth is genomic advancements, and our slide really just shows the evolution of sequencing human genes. The first gene was sequenced for $2.7 billion and took 13 years. Now, initially, if you really wanted to invest in gene sequencing technology in the mid-2000s, you really just had a couple of different choices. Illumina, which ended up becoming the dominant player in that area, and then another company that has since gone out of business. As it evolves, the opportunity for investing in this space has also evolved, as we saw increased investment opportunities first within the equipment space, and then more in terms of R&D spending with what we call CROs and CDMOs, companies that do a lot of work with the pharmaceuticals and biotech companies running trials and those particular types of things. Now, as we look ahead, our real excitement is on the therapeutics side of things. We really feel as though as the cost of sequencing genes has come down significantly to under $1,000, we've seen a significant amount of money flow into the healthcare space looking for cures for various diseases. And we think that the therapeutic side is going to be increasingly exciting over the next decade. Really an area where we could find significant investment opportunities. The third platform of growth is intelligent machines, and this is the coming together of artificial intelligence and the physical world. And we really feel as though there's kind of a virtuous circle here where we start with intelligent design. We're using more computers and software to design products in a smarter way. You don't really have to build as many prototypes for, say, cars or other types of goods because you can do a lot of this work with computer software. And so the design process is becoming more intelligent. Manufacturing side is also becoming more intelligent. We've seen an increasing use of robotics within the manufacturing side of things. The products themselves are becoming more intelligent, be it Tesla, be it your iPhone or various medical devices. So there's a lot of information that is being created by these devices which improve the product. Logistics side also becoming more intelligent. And then the maintenance side is becoming more intelligent where you have sensors and semiconductors that are being installed on, say, jet engines or manufacturing equipment, monitoring these products at all times, really trying to anticipate when there's going to be downtime and then fixing these products before they actually break. And then all of that information feeds back into the design of the product to make the next iteration of that product even better. So a lot of excitement taking place in intelligent machines. Now on new finance, we think about the access to capital really kind of across three vectors. Money itself. We don't really have a lot of exposure here. I'm not really able to invest in cryptocurrencies, at least within our group. On efficient pricing, there's some excitement taking place in terms of efficient pricing, but ultimately this is mostly deflationary. A lot of the innovation taking place within financial services is highly deflationary. Where we really are seeing a lot of excitement, it really is more on the method of exchange and particularly on the payment side. We're seeing a lot of excitement within payments and a lot of innovation taking place within payments, be it with buy now or pay later, or QR codes that are in stores, or companies that are helping to facilitate the cryptocurrency ecosystem. A lot of excitement taking place within this new finance theme, but our exposure tends to be much more on the payment side. Finally, the fifth platform of growth is exponential data, and this really starts with the idea that we are creating constantly an incredible amount of data. And we need to find uses for this data and ways to use this data more efficiently and to add value. We think about it as an equation where we are creating an incredible amount of data right now. We need to clean that data. We need to store the data. We need to deliver or transmit the data. What's interesting about the first part of this equation is all elements of this are generally coming down in price. That means the output, the use cases of data, be it augmented and virtual reality, artificial intelligence and machine learning, software as a service, the sharing economy, the application side of things continues to increase. Now we're finding opportunities really across this entire equation, but it is the use cases, the applications where we really think we are going to see the most excitement going forward. So I like to go through the 5 platforms of growth really to give you an idea not only of where we're seeing exciting innovations taking place today, but also where we think there could be exciting innovation unfolding over the next, say, 3, 5, and 10 years. So in summary, we really covered 3 things today. First, why invest in innovation today? First, we believe that the pace of innovation is accelerating. So for those people that are investing in innovation, the opportunity set for investment continues to increase because innovation itself is accelerating. And we also believe that innovation drives long-term wealth creation in the economy. So we really want to focus on those companies creating new products, new processes, new technologies, and sometimes entirely new industries, because those are the companies that are creating economic wealth, economic growth, and economic value, and that's one way to outperform the market. The second thing we discussed was valuations, and we really talked about this in one of 2 ways. First, How are these innovative companies misunderstood? And in our opinion, they are misunderstood in one of two ways. Either the duration of growth lasts much longer than expected, or the pace of growth is faster than expected, or in some cases, it's a combination of the two. And then we addressed technology sector valuations, coming to the conclusion that we really believe that valuations are reasonable when you compare them to the overall market, trading at a little bit of a premium, but with strong secular growth characteristics and high quality. And then we ended with a discussion of our 5 platforms of growth. Really, where do we see the opportunities to invest in innovation, not only today, but also over the next, say, 3, 5, and 10 years. So I wanted to thank you very much for giving me the opportunity to discuss our approach to investing in innovation. Hopefully through this presentation, you now have a better understanding of how we invest in innovation, our thoughts on technology valuations, as well as having an idea of where we are finding opportunities both today and in the future. Thank you once again.
และนี่ก็เป็นการพูดคุยสำหรับโอกาสการลงทุนในหุ้นเทคโนโลยีโดยคุณจอร์จ รัสเซล CFA Institutional Portfolio Manager จาก Franklin Equity Group หากนักลงทุนท่านใดสนใจดูรายละเอียดเพิ่มเติมเกี่ยวกับการลงทุนระดับโลกสามารถเข้าไปเยี่ยมชมได้ที่ FINNOMENA.com/Franklin Templeton ในวันนี้ผมศกฤษฏ สิริสมภพ Content Developer จาก FINNOMENA และทีมงานก็ต้องขอตัวลากันไปก่อนสำหรับวันนี้สวัสดีครับ